Be Wealthy and Smart, episode 1527.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about an interest rate cut possibly coming in September. Now, this was an interesting article that caught my attention that said that Goldman Sachs said it's moving up its call from December for rate cuts to September. It's forecasting a 0.25%, 25 basis points rate cut in September and lowering its terminal rate forecast to 3 to 3.25%. They said we are now penciling in cuts in September, October, and December in 2025, as well as March and June in 2026. And they put the odds of a cut in September at around 50-50. So what they're saying is they're expecting a 0.25% cut in September, another quarter cut in October, and again in December. That's 75 basis points or 0.75% this year, as well as 0.5% in 2026. So that's 1.25% between now and next June is what Goldman Sachs is forecasting, which is less than what I'm forecasting. I think that we are going to have deeper cuts than that this year, by the end of this year. But it's nice to see Goldman Sachs come along and start moving up their forecast. And I think they'll continue to do that. When they're looking at reasons for the September rate cut, they're pointing to underwhelming tariff effects, larger disinflationary offsets, and either genuine labor market softness or a scare from month-to-month volatility. They continued that early evidence suggests the inflationary impact of tariffs is smaller than expected, and other disinflationary forces are gathering strength. Goldman said very early evidence suggests that tariff effects look a bit smaller than we expected. Other disinflationary forces have been stronger, and we suspect that the Fed leadership shares our view that tariffs will only have a one-time price level effect. Alongside the milder impact of tariffs on inflation, moderating wage growth, softer new rent inflation, and weak travel demand are providing the disinflation trend with renewed momentum. After a brief jump, inflation expectations have fallen back a bit, and Goldman believes there's a growing consensus that technical factors and partisan bias have distorted recent survey readings. The labor market, meanwhile, remains healthy, but there are signs of resilience may be wearing off. Goldman continued, signs of cracks in the labor market could even usher in a rate cut as soon as July if this week's non-farm payrolls report shows a much larger drop than expected. They said, we do not expect a cut in July, barring much weaker than expected employment data this week. Looking ahead, the economists expect a deeper cut cycle, dialing back their expectations for the Fed's terminal rate to peak in a range of 3% to 3.25%, down from 3.5% to 3.75% previously, reflecting a less hawkish outlook from policymakers and less conviction that a higher rate is needed to offset fiscal stimulus or easy financial conditions. Yeah, so this is with tariffs looking less threatening and disinflationary forces building. Rate cuts now appear to be coming closer than ever to happening with the Fed and potentially kicking off a faster and deeper easing cycle than they had previously thought. So let's hope for lower interest rates. I think the housing market definitely needs lower interest rates. It's a bit stalled, and some areas of the market around the country are having a very difficult time. And lower rates would allow people to qualify for more home in terms of how much they can qualify for in a mortgage. It would help business loans and, of course, the stock market and crypto markets. So we'll keep an eye on what happens and keep reporting back to you, but it looks like we could get our first interest rate cut possibly as soon as July, more likely September. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.